What separates a risky gamble from a calculated investment? Hello everyone, I am Tamandeep and today we are going to peel down how to analyze a stock. For that, I'll use a real world example, and the example is India Glycols Limited. So let's start the video with its share price. So as we can see, India Glycols Limited grew by 500% over the last 5 years, which is around 43% return per annum. I'll let that settle in. Now that we are impressed with the stock, let's start the video with a disclaimer. Guys, this is not a financial advice video. This is a financial analysis video. This video is about analysis of the stock rather than this stock. Yeah. So buy and sell stocks at your own risk. So coming back to the analysis. See, the first rule of investment is know what you own. So to know what we are about to own, let's understand their business. So what does India Glycols Limited do? India Glycols Limited produces various products, chemicals like glycols. What a research, guys! Thank you, thank you, thank you, thank you, thank you. See, we should go beyond a simple Google search, shouldn't we? We should go through their official site. We should go through various helping sites like screener.in. Yeah. And when you go through such sites, you might find something substantial. Like I found this. See guys, this is investors presentation. This is present on their official website. So such things provide you with a really good data. This data tells you their future vision, their projects that they are investing in, their numbers, and all of that is rather important. So I won't bore you with the entire presentation. Let me just tell you the conclusion that I got to by going through the presentation. So the conclusion is that they are heavily inclining towards green chemicals, chemicals that are good for environment and do not harm them. See, as far as my thinking goes, this is beyond just a marketing stunt. Yeah, they seems to be aligning themselves with global demand of sustainable future. Guys, we all are drinking our cola nowadays with through that disgusting cardboard straws, right? It's disgusting, yet we are doing that. The globe is changing, and this company seems to be aligning themselves with that. So that's good. Yeah. Now coming to my favorite part, numbers. See guys, money is the final confirmation. The way I see, this is the most important part of analysis of a stock. When you go through various websites for finding data for their numbers, you will come across a lot of data. I have summarized some of that here. Not only have I provided the data, but I have also provided the site from where I got that data. Yeah, you should take a screenshot of this. Now that you have taken screenshot of this, let's go to the few points that we conclude from this data. The numbers are supposed to be divided into three broad categories: growth, debt, and cash flow. Let's start with growth. So their sales growth over the last 5 years was rather depressing. It's way less, it's just 6.78%. Nevertheless, their last year's profit growth was really good, 18.89%. So this might indicate that their new green projects are paying off. Yeah, that's good. See, such change in gears are called inflection points. All the mathematics graduate know what I'm talking about, right? So point to remember is that such points are supposed to be the ideal place to invest in a stock. So we are at that point. But always know your risks. Yeah. Moving to debt. So their total borrowing is expected to rise to 1,892 crores by the end of financial year 2025, which will make their debt to equity ratio to 0.96. This is bad, guys. It's way higher than what you would like to see. Anyhow, the company's net debt to PBILDT was 4.91 in FY24. What is PBILDT? It stands for Profit Before Interest, Lease Rentals, Depreciation and Taxation. So, company's net debt to profit was 4.91 and they are aiming it to reduce to 4.5 by the end of FY25. So this is a data in front of us. What does this tell us? That's important, right? So this figure is high. So this tells us that this company is under a heavy financial burden, which is common in the case of companies with aggressive expansion cycles, like they are doing with their green projects. So, and their aim, if they are able to achieve their aim or not, would tell us a lot about if their strategies are succeeding or not. So this is a rather important data. Every investor should look after this. So coming to the final part, cash flow. CFI. What is CFI now? So CFI means investing cash flow. This means that this company has invested 736 crore rupees. Maybe they bought new refineries, maybe new machinery, but they invested this much. This much cash was burnt. Usually at this point, I would say it's a big, big red flag. But is it though? It is kind of expected, isn't it? You see, this company has new projects. It's heavily investing. It's trying to grow itself with the help of those projects. It will burn some money in that. This, I believe, was expected in our case. But usually, this bigger figure is not good. Yeah. So I like to stop the video here. I say this video has already been quite informative. Let's give it time to settle in, and in upcoming videos, we'll go through the valuation and conclusion of the data. Yeah. See you guys. Bye. Stay tuned in.